The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, the grain and oilseed trade took a bit of a pause on Thursday, if we could call it that. I guess more mixed activity. It has been a volatile week. We've seen this recent rally continuing on a number of factors. And right now we want to talk about those factors and just talk about the overall sentiment in this trade, grains, and the livestock side, too. A good day in hogs Thursday. Joining us now, we welcome in our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, good to catch up with you again this week, and I hope things are going well so far. A fairly quiet day in the markets on Thursday.
Yeah, right after the markets closed, I communicated with my team, and I've said neutral close ? And that's the kind of response I got back. So when you had a pretty good range in a lot of these markets again today, but little change of consequence when you look at something like the wheat market, Chicago. Mixed, 3/4 of a penny lower to 3/4 higher in the front 2 months. And when you look at the December contract, it had a low of 7.29 3/4, high of 7.68 3/4, a 39-cent trading range, and we've basically finished dead even. Same thing in beans and corn. Maybe took a bit of a breather today. Option expiration for August, options tomorrow. Last time we got toward an option expiration date, we saw a lot of volatility. But the key to all this really is the perceptive view of what does it look like in the weather front the next 2 weeks. The longer range forecasts came out today and are actually calling for a cooler and less droughty. In fact, the drought map is expected to shrink. So that sounds great, but when you're someone who hasn't had much rain lately and it's going to heat up here in the next week, you need some rain sooner than later. There's rain on the radar. Again, we keep seeing this energy in the system, but how much does it fall in a widespread pattern? That's been the real problem with a lot of this rainfall this year, the scattered nature of it.
Bryan, would you say this outlook for a hot and dry forecast, we'll call it the next 10 to 14 days, do you think that's having more weight in the grain trade than the Black Sea issues and Russia backing out of the grain deal right now?
Well, they both seem to have had their share. We saw the wheat market just explode yesterday, and then some follow through today and a lot of back and forth. But for any corn or soybean producer in particular, and not to take anything away from the soft or the spring wheat guys, but there is just a lot of need for moistures. Everybody knows in July and August to fill the crop. And I don't recall, today's the 20th, at least in recent years, I don't recall such inconsistency when I talk to producers. Some producers, I think, have a lot of rain, so I'll call them. I talked to one guy in Western Iowa today. I said, it looked like you've been in the path of some pretty good storms and recipient. And he goes, well, not really. 3/4 of an inch the last 3 weeks, going to get hot and dry, variable. And you talk to the next guy, well, it doesn't look like you got too much. Did you get any at all? Yeah, we had 2 inches of rain, so it's scattered. But the general theme is the corn crop does have a lot of variability to it, and there's some really poor stuff, some really great stuff, and a lot of stuff that the jury's going to be out until we see what this rainfall amount looks like.
So we think about some of those folks who haven't had the rainfall and they're thinking about trying to catch up on some of their selling of new crop. I know that's a double-edged sword there. So I mean, what do we look at? Do we sell on the board and so we don't have to make a cash sale here? I mean, what are some of the different options that we have in front of us if I'm a core soybean producer that either, A, I know I have a good crop, or B, I'm not so sure, but I want to take advantage of the rally?
Really good questions, because that's the same question the farmer's asking himself. So generally in times of uncertainty with production, but we have price to defend, I'm going to lean toward recommending put options a little more. I know it's another expense, but it leaves that top side open. So You want to be able to floor this. The last thing you need, and living in Wisconsin, we've had a few years of this where all of a sudden, the nation has a pretty good crop and we don't. So if you forward sold, now you're struggling with that. You're dealing with lower prices and a poor crop. And with the variability to the crop, there could be a lot of crop that just isn't that great that you don't want to forward sell right now. The recent high in December corn, Jesse, 630 at the end of June. Recent low here this month, 581. The midpoint is 655 or 555. I wish it was 650. 555. We've hit that level twice in the last 2 days. So we've bounced it back, but the last 2 days are still kind of pausing. It's just not taking off. That's all weather related. So I like puts. The second strategy would maybe be buy a put, sell a call. That's a marginable position. If you do choose a forward contract, you want to stay in the game. You forward contract, you buy a call, or you buy something we call a bull call spread. Buy a call, sell a call, a little bit cheaper. If we buy the same strike price as a single call, but we get premium coming back, the penalty is a fixed profit position. So lots of different strategies. Talk them out with your advisor. Make sure that you look at the right strategy for defending a crop that has upside potential, and that your crop, if you're not sure, that you don't want to have to fulfill contracts.
It feels like, and great summation of that, Bryan. I appreciate that great analysis there. Feels like between corn and soybeans that the fundamentals are a little better in this soybean market right now versus the corn market. To me, the corn market is what I'm more worried about, maybe losing steam and the air very thin under this corn market right now versus soybeans, Bryan.
Well, a couple of things with that, and I agree totally with that. And let me give you the rationale why. First, Brazil harvests a bean crop, right? So they've been marketing beans for months. Now they're going to, and are in the middle of harvesting a corn crop that's coming to the marketplace and competing with our corn. So if we're not competitively priced, it's going to be hard to really expect we're going to see this export market really robust in the months ahead, or at least weeks ahead, because of what Brazil has to offer to the marketplace. So that's one. Two, corn's just a better dry weather plant, we believe, historically. The old saying is, get my beans to August and give me some rain. Well, if you don't get much rain in August, that's where the jeopardy of the crop is. You've got a lot of corn right now that's getting there, and if it gets one more rain, might be closer to its home stretch. Thirdly, we've got more acres of corn, less acres of beans. And if you look at the last USDA report, if you might remember, the market was anticipating 200 million bushels of carryout beans. It came out at 300 million. There was a 100 million bushel reduction in exports. So, that's a number that can be shifted or changed. Exports aren't a fact, they're projected, and they're fact once they're sold. So there's a little bit of suspicion with that, but really the other kind of suspicion is, and where the real bullishness come into play, is if the market focuses on reduction in yield. Right now, the USDA is anticipating 52 bushels an acre, 300 million bushels of carryout, Jesse. Boy, just knock it 2 bushels, okay? 2 bushels an acre, knock that off. Our carryout's cut in more than half. That's back into the rationing window. And that's, 2 divided by 52, that's a 3.8% reduction. Think about the variability of growing a crop, in particular beans. That's very conceivable we could be off 2 bushels, and that the bean market would have to ration its inventory.
Bryan, I know as well, you mentioned exports there. I glanced at the weekly export sales numbers, but I've also heard China maybe sniffing around for some U.S. corn and or beans off the PNW. I don't know if you've heard that note as well, but obviously demand is a big issue for us right now, Bryan.
Well, I think it is, but I think that's what got the bean market in part started up the way that it did. Remember, beans were at about $11.30 just not too long ago, and all of a sudden you're at $14 beans. So when you look at the big picture production, it's worried about that, but you have talk of China in the market searching. I've always said China, and I have to be careful with my words because I've said that in a window where China was always experiencing pretty robust growth. But I often said that China doesn't buy on price, so much as they buy a need. So China needs, whether beans are $11 or 14, they're going to buy beans. Period. You don't have a choice.
Hmm.
You're not going to shut down your. You may gradually move out of your some kind of a hog facility or something, but nobody's going to shut down. They'll pay it and bite the bullet. Um, had dairy producer tell me this years ago in 2012. He got a survey. At what point do you stop buying corn? He wrote back, "I don't." That was his answer. That was his survey. So export sales today, 4.7 on the old crop beans, but a good number, really, a new crop, 27.9 million. So I like the bean number on that new crop in particular. Even corn had a decent day, 28 plus million bushels combined, old and new crop. Not a great day, but a decent day.
We're having a conversation today with Bryan Doherty with Total Farm Marketing. Bryan, let's go over to the livestock trade a little bit. Live and feeder cattle were a little lower on Thursday. I have to wonder, though, is that maybe some squaring up ahead of cattle on feed, cattle inventory Friday afternoon? What do you think?
I no doubt. You've got some pretty big reports out tomorrow. It's a Thursday. You had new high contract high prices today. Somebody was running their stops up pretty tight. Somebody said, let's sell this market in front of a report. We've had a really good week. And I think that's all there's to that story today. I can't see, I'm not uncovering anything else that says, oh my gosh, we had this news story or we had, cutouts drop, just plummet today. Nothing like that. This is a technical day where traders took gains out of the market. I think traders were buying hogs and selling cattle late in the session on trade spreads. You had hogs, 300 points higher in October. I think it's just a real good bull market that is a little bit, and probably will be tomorrow, defensive in front of some pretty big reports.
And I know in cash country, we're seeing a few bids out there for cattle, but feedlots continuing to hold out for more. And that's really started to become a trend here the last couple of weeks, Bryan.
It is, and they may have a little leverage with this heat expected because weight gain will be so limited. And there's 2 times of the year when you get really kind of hot or just warm. Weight gain seems to be really problematic. And then it's sort of that, I'd call that April-March window or October, November, when feed lots get sloppy and you're above freezing and below freezing. So this is right here. We got some heat on the way that looks like limits weight gain. So I think, unless we get some big surprises on the reports, we'll show, I think total cattle and feed numbers will probably be down in that 2 to 3% area, which all makes sense to me. I mean, we've been dealing with a tightening supply for several years, all drought related, and then drought and price related to feed.
You mentioned a little bit of selling cattle, buying hogs on Thursday potentially. I mean, triple-digit gains in the hogs in the front months. I've been hearing a lot of folks though starting to put more focus on the October contract versus August hogs. Do you think that's the case right now with August being just so high in that $100 range?
Sure, and we saw today where October did lead the way higher, and so when I look at that, traditionally the October hog contract had been. The seasonal time of the year has been that's the lowest time of the year, or the expectation for the lowest price of the year, and that goes back to the old farrow to finish operations that a lot of farmers had, and you farrowed where you had more supply coming in late summer, early fall. Supply comes year round right now, but for some reason it seems like the market still focuses on this old historical kind of presence that bigger supplies in October, and maybe there's some, but we have big supplies year round, and that's really not the issue. So I've been surprised at how October and December have just been so defensive versus the front month and then the months after that. But a really good cash market has developed. You've got a cash index right now, 103. You got October 84.72. August is your lead front month here. Now with July moving off the board, so. Just too much premium from my perspective to not see something like we saw today, October take off.
Definitely. Bryan, look over at the dairy market. I'm seeing some nice numbers over there, some nice positivity on Thursday. What's your thoughts?
Yeah, so we had some real big pops in the cheese market today, and we've had some real pops in the cheese market over the last 2 weeks. So we've seen the cheese market on the daily cash cheese trade show real signs of life. We've seen a lot of activity or hearing about a lot of activity that farmers, they have been slimming the herds down. and it's released shortly, but the milk production report might give us a little bit more insight. But we're expecting that the cow herd is on the decline, and high corn prices compared to historicals, low milk price. It just all adds up. The milk market is one of clearing forces. So you had a really strong, impressive limit up move so far today in the September contract, 17.16, way, way, way in the oversold territory. Finally got some life in there, and milk market may also be the recipient. If you look at hogs, you look at a lot of markets here, look at the stock market, energies, more of a recipient of maybe more risk on, that money is finding its way to where value might be rather than finding its way to CDs because you're worried about interest rate rises or something like that. So, so if inflation's getting under control, now it's time to go back into, things that have value.
Bryan, great thoughts as always. Before we let you go, anything final you want to share or reiterate to folks today?
I might have said it last week, but I'll say it again anyways this week. If you look at the corn market, for instance, the last couple of days, we had some pretty good jumps and then we settled back. At the end of June, ran all the way up to 630, and anybody with 2 bits of common sense would say, well, we're doing this for a reason. We probably won't see a big pullback. Maybe we'll correct down. Maybe we'll have some, and within a very short period of time, not only did we give all of that rally back, but we sunk into new lows. So the point of it is that if you have thoughts of where you would be a seller and like to sell, get your limit orders. They're called limits. You're setting a limit to the least you're willing to accept, or otherwise known as price orders. Get your prices out there. Get your limits, your targets, whatever you want to call it, and let them get hit. Too many people have an idea where they want to sell, and as the market gets there, they move that up. And that's okay for a while, but at some point that is not going to work. And when it ends sometimes so violently as it did in June that it's just hard to catch it. We saw it last year. Lost $1.85 in December corn in about 4 weeks. So again, that time of year to really be thinking about it.
Bryan, if folks want to reach out to you and the team there at Total Farm Marketing, get some advice, what's the best way to reach you?
I'd ask them to just give us a phone call, Jesse, 800-334-9779. If you'd like to email me, it's Bryan with a Y at totalfarmmarketing.com, or check out our website, totalfarmmarketing.com. Those are the 3 best ways to probably reach us. We'd love that conversation, though, if you're so encouraged to give us a call.
With that, Bryan Doherty with Total Farm Marketing. Always great to catch up with you, my friend. Have an awesome weekend. We'll talk to you next week.
You betcha, Jesse. Thank you, and good luck to everybody. Hopefully we'll get some rain over the next few weeks.
I couldn't agree more. That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.